Every few years, optimism about Brazil returns to the spotlight, only to fade just as quickly. But with structural reforms, a potential wave of rate cuts, and global tailwinds at its back, could this be the moment that Brazil lives up to the hype? Let's find out what's fueling the buzz and what could potentially ground it right now on UBS Trending. Hi everyone and welcome to UBS Trending. I'm Anthony Pastore. Thanks for being with us today. Alejo Cherwanko, the CIO for Emerging Markets Americas here at UBS, is back in the studio. We're going to talk about Brazil, and I think I want to start, first of all, Alejo, welcome, but I wanted to ask you, Brazil obviously is a country on the world stage. It's part of your emerging markets portfolio, but why is it that we're talking about it now? Why is it important to have this conversation?
Thanks for having me, Anthony. It's always so good to be here. We shouldn't forget Brazil is a country of 210 million people. From a surface perspective, comparable to continental United States. It is home to the largest rainforest anywhere in the world. It shouldn't come as a surprise that every so often investors get excited about Brazil. And in addition, as of late, we've had quite a bit of innovation in different industries. Manufacturing, think about Embraer, the third largest maker of commercial aircraft. Or in services, think about Nubank, one of the most disrupting e-banks anywhere in the world. So there's enough elements today to create, as you said it, a bit of a buzz around Brazil.
Yeah, and so that sort of brings us to today, which is, we know that Brazil, well, maybe we don't know, our viewers, we know, but maybe our viewers don't know that Brazil has kind of had a history of some short-lived spurts when it comes to their economy. There's been a lot of headlines in the past about their political environment, which we've talked about in the past as well. What's different this time? Is there any evidence that maybe this time will be different, where now they can be on a solid trajectory in the right direction?
Yes, there's early evidence that things are changing. If you look at GDP growth since the pandemic, it's averaged 3.5% every year, which is not a small number for an economy like Brazil's. And this has been fueled by a number of structural reforms that the country has adopted to flexibilize and modernize its economy from the days of the Temer administration, the Bolsonaro administration, in addition to a fair amount of fiscal spending. This helps explain the dynamism of the economy. But as I said before, there's innovation, there's disruption in manufacturing, in services, and in addition, in the primary sector or in agriculture, when you marry together great endowments of natural resources with technology, and that's what Brazil is doing very well.
Right, and now we have the presidency of President da Silva, or Lula, as he is more commonly referred to. So let me ask you this, and Alejo, there's a lot going on the international stage. We know that from the U.S. side, lots of trade tensions and tariff talks, and the U.S. dollar is weakening. Does this create a tailwind for Brazilian assets? Is this a helpful thing for the country in the sense that the rest of the world, especially when it comes to trade, is a little bit in flux?
I think it does. So let's take what you shared with us in turn. First of all, weak dollar. There's nothing better for emerging markets than a depreciating U.S. dollar.
That's not necessarily just true for Brazil either. We're talking other emerging countries
Broad
that are
emerging
benefiting.
markets, exactly. What it does, by and large, is it eases financial conditions. It makes the cost of borrowing for the sovereign, for corporates, lower. It pushes capital from the developed world into the emerging markets. And this helps all developing economies. But I think Brazil stands out, historically at least, in terms of the sensitivity of its economy and of the price of Brazilian assets to weakness in the US dollar. The other side of the story is trade. We are in the middle of some sort of global trade war, but Brazil is relatively insulated. Think about the fact that Brazil has a trade deficit with the United States, so it is not in the eye of the storm. And if you go back to April 2nd, Brazil was on the receiving end of the lowest reciprocal tariff announced. That gives you some confidence that Brazil can remain relatively outside of controversy.
Right. There's a statistic that I read in one of your reports that you just wrote talking about the weaker US dollar, and I thought this was really eye-opening. Every 1% drop in the US dollar index has meant a 5% gain for the MSCI Brazil index in dollar terms. That's significant.
Historically, that's the case, and we think there's enough reason to support that this is extrapolatable moving forward.
Right. So when you go more into the country itself, obviously Brazil has its own central bank, like we have our Federal Reserve here in the U.S. They're poised to cut rates, and political winds kind of shifting towards more market-friendly reforms. That seems to be what's going on in the country now. How could that potentially change the outlook for equities there, which, by the way, you and CIO have just upgraded Brazilian equities to attractive.
That's right.
So how could it affect or their outlook for equities and for their bonds?
Absolutely. Thinking about domestic policy rates. As we speak, interest rate in the country, let's call it the equivalent of the Fed funds rate, is 15%. This is massive. Here's the good news. The central bank seems to have ended a hiking cycle. And the next move, most likely, is going to be an interest rate cut. Historically, when the Brazilian central bank cuts interest rates, Brazilian assets do well. It takes time. The mechanics have to do with locals being forced out of sovereign bonds into riskier parts of the risk curve, including corporate bonds, including equities. So that's one reality. You also talked about political dynamics. And here I need to emphasize that Brazil is not alone. The political pendulum in Latin America seems to be shifting from the left towards the center right. The examples of Argentina come to mind, El Salvador, Ecuador, and there are elections in Brazil next year. And from early indications of polling, there seems to be a wind behind the back of center-right politicians.
Okay. Yeah, that's interesting. And also, when you going back to that 15% number, which is their overnight rate, ours here is about 4.25%. That's the Fed funds rate in the U.S.
Quite a difference.
Huge difference. And when you really put those numbers compared, like next to each other, you can really understand how significant that 15% is. So when rates do start getting cut by their central bank, that could be a big win for Brazilian citizens as well. Between the U.S. dollar weakening and also them lowering their overnight lending rate, it could really potentially spark an economic boost there.
And both are related. If the dollar weakens, this allows the central bank to cut, reinforcing the impact.
Right. Excellent. So Alejo, just before I let you go, we always want to make sure that we're fully informing our viewers about everything. What are the potential risks that are involved here? You know, we have seen Brazil get close to these levels before, and then it just sort of goes the other direction again. Are there any risks that you're keeping track of that could potentially get in the way of what we were just talking about here with this economic cycle that we're hoping takes a positive turn for the country?
Thinking about domestic risks, Brazil is always associated with fiscal irresponsibility. We have to remember that debt to GDP in Brazil is 80%. The deficit to GDP is fairly large. So if we see politicians pushing the limits of fiscal policy, this can become a problem. In addition, you got politics. It's impossible to predict elections anywhere in the world. We think the pendulum is shifting in Latin America. Will this translate into a concrete result in Brazil? To be honest, is anybody's guess at this point. External risks, we talked about a weak dollar being a tailwind. If we go back to a strong dollar, that's going to be a headwind.
Right.
In addition, for emerging markets to perform well, you need risk on globally. If we see global slowdown, if we see very severe trade schisms, that would be a problem for emerging markets at large and Brazil in particular.
Right. Alejo, thank you. Yeah, it's a really interesting story and compelling for sure. I also saw the statistics that it looks like even from a political standpoint, if you look at the majority of countries in South America, they are kind of leaning more politically to where Brazil is going, which is a little bit center, but maybe a little left of center. So it's not every country, but that's certainly an interesting turn of events compared to where we were just a couple of years ago.
Totally. And one more thing I forgot. Brazil is relatively cheap. When you evaluate the price to earnings ratio of Brazilian stocks, and you compare that to their own history, they're cheap. Compare them to the average of emerging markets, they're cheap. let alone a comparison to developed markets. So that's another factor. If you add external tailwinds, domestic tailwinds, on top of fair to attractive valuations, you've got a nice combination.
And it sounds really compelling for U.S. investors who are looking to potentially invest, if they're not already, in emerging markets, which of course adds to the idea of a well-diversified portfolio, which you and I have been talking about for many years together. So great stuff. Alejo, thanks very much. And again, the report is out where we talk about your team upgrading Brazilian equities to attractive. So I'll encourage everybody to get a look at that. So thanks, Alejo. Good to have you through the studio.
Anytime.
See you soon. And thanks for joining us, everybody. For that particular report and many others written by Alejo and the rest of the Chief Investment Office, visit our Insights website at ubs.com/views. Plus, you can follow UBS on social media. We're on LinkedIn, Facebook, and Instagram. Plus, you can check out our Instagram channel at UBS Trending. Lots of studios content there for you. And as always, if you have any questions about your portfolio or what Alejo and I spoke about today, make sure you're continuing this conversation with your financial advisor. Until next time, I'm Anthony Pastore. We wish you a great rest of your day. And remember to keep your eyes on what's trending. See you soon, everybody.